is a space that is very, very wide, and you need knowledge to, enter into you need knowledge to find yourself and operate in that system. And that is why we have brought in professionals from different industry who will be taking us on several trainings that we'll be doing. So this training is going to last for 3 weeks, 3 Sundays. We are starting from today. We are going to have this training. Another set of people is going to take us next week, and then upper week also. So I want to encourage everybody to take full advantage of this training that is being organized by Elite Accounting Professional Service. So without wasting much of our time, we have in our midst tonight an industry expert. I will just read the profile of the person that will take us on this training this evening. His name is Mr. Adeyemi Oluwabenga Samuel. I'll briefly read his profile, and then I would encourage us to pay close attention to what he's about to give us this evening. So Mr. Oluwabenga Samuel is a chartered accountant with extensive experience in both the external and the internal auditing industry. His experience spans across various sectors, including fast-moving consumer goods, the oil and gas industry, consulting firm, and also a financial services. Mr. Oluwabenga Adeyemi has developed a strong foundation in financial management, risk assessment, and compliance. As an external auditor, he has been responsible for examining and evaluating the financial records of organizations to ensure accuracy. Additionally, his experience as an internal auditor and also an external auditor has also advanced his knowledge in assessing internal controls, identifying areas for improvement, and providing recommendations to enhance operational efficiency and mitigate against risks within the industry. Mr. Benga's ambition to become a world-class asset to a reputable organization is commendable, and to further enhance his skills and his expertise, he pursued an MBA degree in accounting and finance. This additional education demonstrates his dedication to continuous learning and professional growth, which will undoubtedly contribute to his effectiveness in his role. With his combined experience and professional qualification and advanced degree, Mr. Oluwabenga is well positioned to contribute his expertise in financial management, auditing, and accounting to any reputable organizations he joins. His goal of becoming the best in his craft showcases his commitment to excellence and continuous improvement, making him a valuable asset to any organization in need of his skills. Ladies and gentlemen, we are privileged to have Mr. Oluwabenga with us this evening, and I would like to hand over the floor to Mr. Benga to take us through this tax training. Mr. Oluwabenga, over to you, sir.
Good evening, everyone. Like Mr. Moni said, my name is Adeyemi Oluwabenga Samuel, and he has given a brief intro about myself. So I'm going to just go straight to the point instead of us going back and forth. Yes, so the first topic for today, we'll be talking about the general administration of tax.
Okay, sorry, Mr. Benga, before you proceed, please,
Okay.
if you have any question while the training is going on, please jot down the question, because we don't want questions to be coming in as the training is going on. so that we'll not have a rousy class. So by the time he's done with his presentation, we are going to entertain questions from everybody. All right, go ahead, sir.
All right, thank you, Mr. Money. So we'll be starting with general administration of tax. So a lot of people will just wonder why federal government will come, they will collect tax, state government will come, they will collect tax. The local government will come, they still collect tax from you without having a good reason or having a deep knowledge of why those taxes are being remitted. So I would like to talk about the types of tax. I would like to talk about the types of tax. I would like to broaden people's minds about the remittance of tax and make sure people understand what it means for tax officials to come to your place and for you to even have a knowledge on how to relate and work with them. So I will start with the tax types. We have company income tax. I'm sure some few people would be familiar with that. We have personal income tax. We have value-added tax. We have withholding. We have capital gain tax. We have custom duties and excise duties. And we have education tax, which some few people might know as tertiary education tax. So basically, this tax are being remitted, and there are people that are appointed to collect the tax remittance on behalf of the government. So if we look at, for example, for company income tax, it's being remitted to the federal level. So most of the time you see FIRS officials, which, you know, I guess some people are working in different places already whereby you file your accounts, you submit your accounts. So the first thing I want people to remember that most of the time tax is being done on preceding year basis. Preceding year basis in the sense that if you are to remit your tax, let's use, for example, if you've prepared your audited financial statement for year 2022, it is expected that the tax officials will come to check your account. There will be a tax audit as against your 2022 account 2023. That's what I mean by preceding year basis. So there's a possibility that even the tax officials can come and do a tax audit for even 2015, 2016. It is possible. But all what you need to know is there are different kind of tax audits which we'll be going into. But I'll just like to break down the various types of taxes we have. There are so many more, but just to reduce our timing, I'll be going bit by bit. Okay, sorry, let me see if I could, can we scroll down a little bit? So to talk about the federal, state, and local taxes, yes. So Nigeria operates a federal system of government, so some taxes are collected at the federal level, others are collected at the state level, while some at the local government level. For example, VAT, company income tax, PPT, capital gain tax, which we use as CGT for companies, withholding for companies, TET, that's education tax, personal income tax of armed forces, police force, resident of FCT are collected at the federal level. So sometimes you might be surprised that the personal income tax, I thought it's being collected by the state internal revenue service. I don't want anybody to get confused here. What I said in this is personal income tax of armed forces. So it is the federal level that collects taxes for those military people, let me put it that way. So, but once you see for civilians like us, we remit our taxes to the state internal revenue service we are located to. So if your company is in Lagos State, definitely you know that you have to remit your pay to LIRS. If it's in Ogun State, you know you are remitting to Ogun Internal Revenue Service. So, and so many other states, because every other state has their delegated tax offices that they collect money for. Okay, sorry, I'm hearing a noise somewhere. I don't know. So I would continue by talking about tax identification.
Mr. Benga, please unmute yourself. Benga, can you hear me?
I didn't know I was. Okay, can you hear me now? Sorry, where did I stop? Because I wasn't sure when I was muted. So we're talking about
tax identification.
Yes, number, yeah. So what I'm saying is there are some relevant things. Once you know your company is duly registered under CAC, there are some requested documents which FIRS will ask you for, like your corporate affairs commission, like the CAC documents. They'll request for that to show that truly your company was registered. And another thing is there is a form they will give to you, which you will fill, which they will ask for your directors' names and some other relevant information associated with that form. So once you fill it, it's not meant to take more than a day, but sometimes, you know, the Tax Pro Max has some little pressure whereby their site might not be working well. So most of the time you can, you know, liaise with some tax officials to help you. But I just feel it's something easy that a normal person can do if you are ready to do it yourself. Because I see a lot of people that call me that, oh, please, can I register for TIN? And I tell you that it's something you can do at your, you know, you can do with your comfort. It's not a big deal. All what you need to do is to gather the necessary documentation requested. And somebody is distracting me, please.
I have other things.
All right. Thank you very much, Mr. Omoni. So I'll be going forward to I hope I've been able to explain the TIN. That's the tax identification number. So for you to have a tax identification number, it shows that you are registered under FIRS for you to be thinking of filing your annual returns. So there are some, so I'll be going to bullet point 4, which is talking about tax filing and compliance. So firstly, if you don't have your TIN, don't even bother thinking of filing, because TIN is the first thing I believe that for you to register a company, you must have the tax identification. Sorry, I feel, I don't know. Okay, then once you have that TIN, we can talk about your annual filing. So for the federal level, these are things you need to take cognizance of, like your VAT, your company income tax, and education tax. These are taxes that you can't run from, except your company is a company whereby you are given pioneer legislation. I know some people will be wondering that what does pioneer legislation mean? There are some companies that come into the system, or there are like new industries that come into the system that are giving tax incentives, like tax holidays for them not to remit tax. Sometimes it might be 3 years, sometimes it might be 5 years. So once FIRS and other tax collecting agents identify that truly you are giving pioneer legislation, you are exempted to pay tax for a particular numbers of period. Yes, so after that, so if you are not under the pioneer legislation, it is advisable you file for your tax. So I'll be going deeper, going into company income tax, value added tax, withholding tax. I'll be going deeper as we go further. So I was talking about tax incentive. These are things that government gives into people, like gives people to give them a justifiable reason why they should have their business in the country. That's why you see some multinational companies that come to Nigeria to invest. If the tax was given much burden, a lot of people will not want to invest in the country, irrespective of how the economic situation is presently. So I would just like to go into withholding and VAT application in Nigeria. Please, can you scroll down? Okay. So we'll be talking about withholding and VAT application in Nigeria. A lot of people wonder, what is even this withholding? I know most of us, we have the theoretical knowledge, and that's really fine, because for few people that have the theoretical knowledge, it's easier for me to explain and you understand. But for people that don't even have the experience at all, I would like to break it down for you to understand. Because I could remember there was a day I was discussing with some few people, and the man told me that he has been paying for company income tax, that they used to give him, he just knows that he has withhold, he's just, people are taking withholding from him, he doesn't know what it's for, he's just confused. And I'm like, do you know that you've been offsetting your payment indirectly in advance, in remitting for your company income tax? And the man was confused and was like, what was I talking about? But I'll go further by just, let me even start by explaining what withholding tax is. So I won't go with this because it might go longer. So I'll just like to explain it practically. Withholding tax is an advance payment remitted to FIRS. Although it is most of the time, by the time somebody is charging you withholding, it's not you that is remitting it. It's the person that is removing that withholding that will be remitting on your behalf. Always remember that whenever you are charged withholding, probably when you issue an invoice to somebody and somebody charges you withholding and give you the net payable amount, it shows that the person has taken out part of the money you are going to incur in the future for offsetting your company income tax. So like I said, it is an advance payment, but a lot of people don't know what withholding is meant for. All what you know is that they are removing withholding from you, removing withholding from you. You don't know how it's being done, but that is why we are here to enlighten everyone that withholding is an advance payment that you incur in case you have tax liabilities to remit for. You have your withholding to net off that amount. Sometimes it might be higher, sometimes it might be lower. So I'll be talking about two, which is the applicability. Withholding is applicable to both individuals and corporate entities in Nigeria. So you will see in a way whereby we'll look at withholding, whereby withholding, there are different rates. I don't know if sometimes you see 2.5%, sometimes you see 5% and you get confused. Sometimes you see 10% and you'll be like, what's really happening? If this company is telling me 5% and that company is telling me 2.5, you get really confused. But that is why we are here to make things clearer so that we will not be in a dilemma whereby we'll just say, please, I don't have the time, just take what you have to take without even understanding the reason you are doing this. There are cases whereby some companies might just issue an invoice, they remove 5%. It might not be right. It might be 2.5% they are to remove. But just because they just know that they have to charge withholding, they just do whatever amount that comes to their mind and they believe that's fine. So for individuals and corporate bodies, you need to understand the fact that there are some rates that are the same and there are some rates that are different. Mr. Money, please, can we go to that FIRS slide I sent to you just for them to understand better what I'm trying to say?
All right, give me some minutes.
All right, thank you very much.
Can you see my screen now?
Yes, thank you very much. So if we can see this, you'll be seeing there that withholding tax rates, the types of payments we have for company and we have for individuals. So if we look at dividends, interest, and rent, you'll see that they are of the same rate, which is 10%. So sometimes you'll see for some companies that probably once you are done filing your account, there are some companies that want to pay dividends to their shareholders. So you see that it's taxable, the dividends you are giving, it is taxable, especially when your company is making profit. Except the only reason why you will not be charged withholding is only the fact whereby the money you are issuing out as dividend is higher than your profit. So there is a clause to that. On a normal day, once you are giving your dividend to your shareholders, always know they are to be charged withholding. However, if your dividends paid out is more than your profits, they cannot charge you withholding. So a lot of people don't really understand this. And if you look at it, if you look at when companies pay tax, you see in some cases whereby they declare profits. And by the time they declare profit, they'll just say that they paid dividends. Although FIRS will want to see a proof that you paid your dividend and some other things. But the truth of the matter is that once you've paid that dividend, always know that there will be a withholding tax charged to that dividend amounts payable to irrespective shareholders. So if we look at it now, that's why I'm explaining that dividend part. So we have for interest and rent. So you see that sometimes you want to pay rent, some landlords will ask you for withholding. Don't be surprised. It is both for individuals and companies. But sometimes I rarely see people that charge withholding. So if you look at royalties too, royalties, I am sure some few people might be familiar with royalties too. So it is not applicable to companies. You don't, sorry, it is 10%. I skipped director's fees. So let me just go back to director's fee. It is not applicable to companies, but it is applicable to individuals, 10%. Then if we look at royalties too, royalties, we have 10% for companies and 5% for individuals. We have commissions, which is 10% for companies, 5% for individuals. We use this as a yardstick to understand, and that's why no matter how an invoice is being issued to you, you need to understand what this invoice is talking about. You need to actually know, is this but let me just move further before I explain those. We look at consultancy, professional and management fees. For companies, is 10%, and for individuals, is 5%. And you see a lot of people, if you look at a company like KPMG will be, they'll put them under individuals, because KPMG will not tell you that, yes, everybody knows them as a company on its own, but it's an auditing firm and we are going to put them under individuals. It is not like limited, let me put it that way. It's not a limited company and it is not a PLC. So if we look at technical service fees, we look at companies for 10% and individuals 5%. Now we look at construction. So sometimes you might give a construction company a contract, and you see for companies that people will still charge you 10% for companies. Some people might charge 5%. If probably the tax accountant or the tax consultant knows all this, is going to argue that on a normal day for companies is meant to be 2.5%, and for individuals, 5%. So other construction contracts, it's 5%, 5%, and all types of contracts and agency agreements other than sales and purchase of goods in the ordinary course of business is 5%. So thank you. Can we go back to our slide?
All right.
Okay, you can scroll down. Please, if you have questions, you can, let's compile them. It will be in the comment section, then we answer afterwards. Okay, we're talking about withholding. So with this few explanation, I feel that with this, everybody should understand how withholding is being done. Let me put it that way. So can we just scroll down, because I would love to allow lots of time for people to ask questions on sides they don't understand. I would like to go to VAT. So a lot of people, I noticed that a lot of people don't still have issues with VAT too. Yes, can we scroll? Yes, okay. So value added tax. So it's a consumption tax levied on the value of goods and services at each stage of distribution. It is ultimately borne by the final consumer. So most of the time, you notice that, let's use for manufacturing companies, for example. Now look at those materials they buy and everything. if you look at it well, those people are suffering VAT input. Okay, I'll be talking about VAT input and VAT output as we go further. So what I'm trying to say is that most of the time, the raw materials they buy to make their finished goods, they already charged VAT already, right? But you see that we, the final consumers, when we are buying those consumable goods again, we later find out that we are also paying VAT. So that is what we call VAT input, is the cost incurred while purchasing those raw materials. So there are costs that you suffer, there are taxes you pay for those raw materials you purchased, right? While VAT outputs, this is after you sell a product, you are going to add your own VATable amount to that your cost. So by the time, most of the time, it's easy for manufacturing companies, because most of the time what they do is, once they know that most of their products are VATable, they just take 7.5% of their sales and 7.5% of their direct cost, and the net amount is their net VAT payable. I'm going to explain further because I think it's looking cumbersome right now. So the point I'm making is that VAT is attributed on consumable goods, and the standard rate for Nigeria is currently 7.5%. It has not changed. Before, it was formerly 5%, but it has been amended to 7.5%. So most of the time, FIRS also advise that you register your company as a VATable company. So you might not be surprised if you see that after you register for TIN, they give you a form again that you need to fill a form as a VATable, company. So you need to fill those forms because FIRS needs to know that yes, you are paying for your VAT. Some companies file new, some companies don't. They file new. Some companies pay. So the point I'm making is that there are goods that are exempted from VAT, which we'll be going further by explaining. So I've spoken about the registration, input and output VAT. Then we're talking about filing and payment of VAT. So sometimes you see that some companies, they are meant to remit VAT. So that remittance of VAT should not be more than 15 days of that period. So that means what I'm trying to say is that, let's use, for example, we're in the month of September. So, and you need to file your VAT for August. Today's date is just a second. Today's date is 10. So you still even have little grace. So the point I'm trying to make is that on or before 15 days, you need to pay for August. You need to have filed your VAT for August. If not, there will be penalties that you will pay for. So why pay for that penalties when you know that you can just file for your VAT? A lot of times, some companies might have not known the right amount to pay for VAT. But I still advise you that, is it not better you pay the amount you can pay now, and probably maybe once you see that probably there's a balance, or you pay more than what you are even expected to pay for, there is a way you can reconcile with FIRS or your tax official by explaining to them, and you reconcile. But what will cost you for your company to be paying additional penalties, disregarding the fact that you are not still going to avoid that amount you are planning to pay for? So for you to save costs for your company, it's advisable that you file for VAT. Even if you file new, it is still better whereby you guys still reconcile, even if tax people will still come, but you can still justify it if it's justifiable. But if it's not justifiable, you can explain to them that you plan to pay. But the good thing is that you must file, just to avoid penalties. So we are looking at exemptions and zero rating. Some goods and services may be exempted from VAT. They include all medical and pharmaceutical products. Now, if you look at for pharmaceutical companies, most of their products are VAT exempted. If we look at basic food items like education, okay, basic food item, books and educational materials, baby products. So if you are seeing that you are paying VAT for baby products, there is an issue for the daddies and mommies here. So we look at fertilizer, agriculture, and veterinary medicine, plant and equipment for the use of export processing zone, plant and equipment utilized for gas in downstream sector, agricultural equipment. Other may be subjected to zero rates. So can we go down? So I try to do a tax whereby I'm using a case scenario. Since we are going practical, it's better everybody try to understand what we are talking about, this so-called VAT. How is it applicable? So I'll try to read this question out, and I'm sure these materials will be shared to those that are interested in having a copy. So Bimiga, being a supplier, issued an invoice to Jola, being the customer for custom-made t-shirts worth 100,000 naira. Now they said there's 7.5% VAT inclusive. So now sometimes I tell people that this word VAT inclusive is technical, but a lot of people feel that, oh, it's easy, it's this, it's that. And I say, yeah, it might be easy to you, but I think it took me little time to understand it. Because for someone like me, anytime I see something VAT inclusive, I will believe that there is no VAT there. But the point of this is that looking at this case scenario, it's obvious that there is VAT included in this amount. So that you're not going to be thinking that you charge 100,000, so I have to now add 7.5% VAT again. To me, you are killing yourself because he's already charging VAT in that amount already. So I kept a note that the supplier is an agent acting on behalf of the government, FIRS this case, to charge and remit VAT output. So basically what I'm trying to say is that this person that is charging you VAT is going to be paying that VAT on your behalf. Do you understand? So we would like to look at it. So in this case scenario, there will be 100,000 naira. So 100,000 naira, if we look at the net amount, actually the net amount should be about 92,500. Yes, 92,500. Then adding the remaining balance of 7,500 will give us that 100,000. So you see, I tried to show the double entry, right? Because a lot of accountants, by the time you ask them, or I won't want to use the word accountant, since I believe this platform is not just for accountants, but for other people to have a knowledge of what we are talking about. You see few people that will be like, okay, let me use accountants for example, because sometimes, and then I ask them a question that, how do you post this? Yes, I understand the fact that you've done the right thing, but how do you post it? What do you debit? What do you credit? So I believe that a lot of people find it really hard to understand what you are to debit, what you are to credit, you know, and these are basic things I believe every accountant should understand. These are basics. These are things that cannot be avoidable. Because I see a lot of people that use, you know, accounting software have made everything easy, whereby people don't even know what to debit and credit. What you just know is that you are posting. I've seen lots of people that post, but don't even understand what they are posting. So I would like to go further by explaining most of the things we are going to do. So definitely for this kind of case scenario, you are going to debit bank, you credit revenue, 92,500. You'll be wondering why we are crediting revenue 92,500. The reason we are crediting revenue 92,500 is the fact that we should always remember that there is the amount of 100,000 is inclusive of VAT, inclusive in the sense that there is a VATable amount inclusive in that cost element. You will see in some organizations whereby they will show their invoice and they will tell you the costs that are non-VATable. Do you understand? They will tell you the costs that are non-VATable and the ones that are VATable. So that by the time you are trying to charge them VAT, you only charge VAT on what should be charged VAT on. I don't know if I'm passing a message, but I think by the time we start answering questions, everybody will have a better understanding. So this 92,500, like I said, it wouldn't make sense for you to record the whole 100,000, because at the end, the 92,500 is your main revenue. The balance of 7,500, you are paying it to FIRS. That is why you credit your VAT payable. And if you remember the principles of double entry, that all assets must be debited, all liabilities must be credited, incomes must be credited, and expenses must be debited. So if you look at it from this sense, you always know that by the time you are increasing your assets, if you are increasing your asset and they are telling you all assets must be debited, you need to always have it at the back of your mind that if you are to increase that asset, you have to debit it. If you are to reduce that asset, you have to credit it. A lot of people misinterpret this, but that is why we are here to break things down for everybody to understand. And now, if you look at your revenue is an income. And if you remember the principles of double entry, they said all income must be credited. So that is why we are putting that revenue on the credit side. You shouldn't be confused that that is an inflow. You remember the okay, I won't want to go really deep because I believe some people are not accountants. So I'm just going to give the basics. If you look at that revenue side now, incomes are credited. And definitely, if an income is coming to you, it's an inflow, but it's for you to make your income to increase in your general ledger, then definitely you need to credit it. But if you are to reduce your revenue, you debit it. That is why you see that in this place, the revenue was 92,500, while we are now crediting 7,500 because it is not our amount and it must be payable to FIRS. I hope everyone is following. Please, can we go down? Although I kept another entry whereby we put account receivable, just to be clearer, and that is the person giving us the invoice, right? So the person issuing it will do account receivables, whereby it will debit account receivable is also an asset. It is a current asset because some people also misinterpret current asset for non-current assets. Account receivable, which we call debtors, because I don't know, the IFRS has changed lots of things. What we know as debtors is now receivables, but some people still use debtors. It is still applicable. And so the point I'm making here is that once you debit your account receivable, which is BMIGA that is issuing the invoice, you credit your revenue of that same applicable 92,500, since that amount was VAT inclusive. And lastly, VAT payable. It is not your money, so it needs to go out. So if some people might not ask that, okay, fine, what if they've not paid? I always remember that accounting is on accrual basis and not cash basis. That is why we are different. Private sectors are different from public sector. You can say that private sectors, we deal with accrual, while public sector, they deal with cash basis. That is in Nigeria, yeah. So that is why you see that most of the time, even when we've not gotten that money, we've recorded it. So that is why most accountants, you need to take cognizance of what we call unearned revenue. Yes, it's a revenue. You need to record it, although you've not received the money yet. But accounting is on accrual, but it's not until you receive the money before you record it. If not, you'll be taking your accounting for cash basis. So that is why we have unearned revenue, and we have yes, unearned revenue. So what we are just trying to say here is, in the unearned revenue, I think, yes, credit unearned revenue of 100,000 naira, you debit bank of 100,000 naira. So definitely, if money enter your bank account, definitely the bank will give you a credit alert, so you need to debit your bank. Then unearned revenue, you need to credit it. So we can just go down, just for us not to while away time on double entry. So we are going to go into company income tax. Company income tax, to me, it's one of my favorites. And what I need to explain to people is that company income tax, these are taxes charged on your accessible profits. On your accessible profits. So a lot of people will just wonder that, sometimes this thing, I didn't make profits, that am I still going to pay tax? There are cases whereby you will have to pay tax. That's when minimum tax comes in. But as we are going further, we'll be going into minimum tax. So government has made things easier for us now because there is a new finance act which states that if your turnover, which we call your revenue, from 0 to 25 million, which I consider as SMEs, that's small medium enterprise, I'm happy to tell them that they are not meant to remit any tax. That is for companies that have turnover from 0 to 25 million naira. So, but now you now see that some companies are having turnovers of more than 25 million to 100 million. This kind of companies are what we call the medium-sized companies. We see that you guys are already having money already. So definitely we need to charge tax on that. So what they do is that FIRS have said it that, okay, fine, we can help these people by charging them 25% on their profits. Now, that's why you see that sometimes some people don't pay tax, some people pay 25%, some people pay 30%. It's cumbersome if you don't even understand the reason why we are doing all this. And that is why you see lastly that if you have a gross turnover from 100 million and above, you're a big man. your company is booming. Even if some people will still try to, pad their account and see how they will make a loss. But trust me, your company is not a small company. So they now charge 30% on your profit. I just hope everyone is following with what I'm explaining. So we can scroll down. I've used how to explain the tax rate, the taxable profits, not the accessible, yes, the taxable profit. I think that's better. Then your filing and payment. I think filing and payment is very important. Like I said earlier on, that accounting is on preceding year basis. So definitely, if your account, that's your audited financial statement, is 2022, I expect that if it's December 2022, that is your year end, I expect you to have submitted your account by now. If not, you'll be paying late returns penalty. If your account is June, you must always take cognizance that you must actually file for that account 6 months after the year end. So always remember that even if it's preceding year based, it does not mean that your account ends December, you have the grace till December to file your account. You are shooting your company on the leg. So all what you need to take cognizance of is, I must meet up within that 6 months. Okay, let's go down. Okay, we're still talking about CIT. I would like to mix withholding and CIT. So sometimes you wonder why some companies charge you withholding, they charge you withholding. Trust me, go to your tax pro max, check for your withholding expecting. So whereby when you time you say that you have a tax liability of, let's just say, ₦1,000,000, you might just discover that you have a withholding of ₦5,000,000. Luckily, because probably you've not been using your withholding for some numbers of years. So what is advisable is that you get your withholding tax credit note, which you can get from FIRS or you can get from Tax Pro Max, because that will be easier and it will be accessible. It's accessible to everyone as far as you have your login details to log in into the Tax Pro Max. So what you just have to do there is get your withholding tax credit note, print everything out, and look at the ones you can use that can offset your CIT. And everybody is happy, because I don't see a reason why you have withholding tax credit note and you are not utilizing it. Okay, we can go down and let's go into education tax, because I wouldn't want to waste people's time. I just want to hit the nail on the head while everybody is happy that I've added value today. So we are going into education tax. Education tax, these are taxes that are imposed on us, people like me and you, or let's just say for companies, in a way to help. That's why help government schools. You see that most of the time you wonder that how the government save money to build some schools. You understand how the government see it's through this education tax. So this tax is what they use to build skills for people like me and you to be able to benefit and for us to add value. So that is what education tax is. Effective from 1st of September 2023, there was a new Finance Act law that was imposed, which was saying that, some people now will be wondering that education tax was 2% before, and now it was now 2.5%. From 2.5%, now it's 3%. Then you get confused and what's happening here? Yes, effective from September 1st, 2023, education tax is now 3%. So you shouldn't be surprised whereby people are now using 3%. It is now applicable and you shouldn't be surprised. Thank you very much. So most of the time, most companies file CIT and education. They file CIT and education tax together. Since you are just filing your annual returns, education tax is charged on your assessable profit, while your company income tax is charged on your taxable profit. Always know that they are different. Okay, can we go down, please? Oh, wow. So we'll be going into capital gain tax. A lot of people choose with capital gain tax. So I would like to broaden our knowledge on it for us to have a better understanding. So capital gain tax in Nigeria is a tax levied on the profit or gain realized from the disposal or sale of certain types of assets, such as retail estates, stocks, bonds, and other investments. And here I will be giving key details of what are the assets that are applicable to be charged with capital gain tax. So if we look at applicable assets, we have capital gain tax applied to gain from sale, exchange, or transfer of chargeable assets, real property, marketable security, business asset. I think this is just too theoretical. So looking at it, for example, I have a company, right? And you see me that I want to sell one of my assets. Definitely, if I was to sell my assets for more than the amount I bought it, always remember, for more than the amount I bought it, definitely you've made profit. You are going to pay 10% capital gain tax. You can't avoid it. However, you see some companies whereby they sell some of their cars. You say you sell it as scrap. Yes, fine, you sold it as scrap. Now, you now ask you that, okay, what is the scrap amount? If I see that in your book of accounts or in your AFS, I notice that I'm seeing that that asset you disposed was showing 10 naira. That means the asset is fully depreciated and you are disposing that asset and you dispose that asset for probably like 500,000. I'm going to charge you. There's no how they will not charge you capital gain tax because you've made profits from that asset. However, there's what we call rollover relief. There's what we call, because this is brought in place whereby there are some companies that dispose assets, right? Once they dispose that asset, they use that money they made to buy another asset. If you are to do it that way, they cannot charge you capital gain tax. So you see some companies that FIRS or any tax collecting agent can come to you and say they want to charge you capital gain tax. I'm pleased to inform you today that if you use that same money and you can justify that you use that same amount to buy an asset, they are not meant to charge you capital gain tax. Because I can remember a point in time in one of the previous places I worked where they came to meet us that we need to pay for capital gain tax. And I could remember that we used that same money to buy another asset. We had to argue with the tax office that we use that money to buy another asset so they can't charge us capital gain tax. So we have exemptions of capital gain tax and we have the rate. The rate is 10%, like I've said before. The calculations of capital gain tax is very, very easy, but I feel that us doing that same template, we can always continue from probably further seminars like this for us to pass information across. But I just want everybody to have an idea that capital gain tax is the fixed rate, which is 10%. But always remember that it's charged on assets you dispose. And you should always remember that if you make a loss on that asset, probably what is the market value of that asset? Let me not use an asset that is fully depreciated. You feel that the assets still have probably maybe 2 years useful life, and you feel that you want to increase your capacity. Probably the asset you were using before is not capable. You want to expand and you need to get a bigger asset rather. All what you have to do is you need the capital gain tax. All what you have to do is you just need to dispose that asset and use it to buy that new asset, and capital gain tax will not be charged. But if you dispose that asset and you dispose it lesser than the market value of that asset, you can't be charged capital gain tax. Can we scroll down? I want to see if there's any other thing I'm missing. Mr. Money. Hello? Okay. Okay, we can scroll down. Scroll down. Okay. Okay. So now that we've gone into capital gain tax, I would like to speak to talk about what we call tax audits. So a lot of people, we just wonder that tax people come every time. They just come when they like to tell you that they've come to this exercise. I'm pleased to inform you that I'm here to break down some kind of tax audit exercise that are put in place. And most of the time, the reason for this tax audit exercise is to mitigate tax avoidance. We see lots of companies that they don't want to even remit tax at all, and you want to be enjoying government benefits. And I feel that is not good enough. All what you have to do is to try and see that your company is compliant. Because I believe as a chartered accountant, you need to do things with integrity and make sure that your company are filing their tax returns. I don't expect a company to have an accountant, irrespective of chartered, not chartered, or you are a lawyer, or you are just different line of profession. I believe with this little knowledge you are passing across, you should have an idea and to query whoever is saddled with the responsibility to take care of your tax matters. That why are we paying for late returns penalty? You should know that we should do this. You should know we should do this. You know, you should be able to have that knowledge and be bold to say that, yes, I know about this. I know about this. So we'll be talking about the tax audit exercise. So I'll be going straight to the purpose of tax audit. The primary purpose of tax audit is to ensure that the taxpayers are reporting their income correctly, paying the correct amount of taxes, and complying with all tax laws and regulations. So if we go down, we have the types of tax audits. I'm sure we are familiar with DEX audits. You will see FIRS people that they will bring DEX review. I know most people know it as DEX review. So DEX audits whereby, so DEX office is talking about is a review of tax returns and documents conducted by tax authorities. So sometimes they might go 5 years backward, they might go 3 years backward. But what they are trying to do is to checkmate to see that your company is actually remitting their tax. Then we have what we call field audits. These are different people, but still in the same, they are still in the same tax board or tax office. These ones come independently too. It's an audit conducted at the taxpayer's place for business. So sometimes you see some tax officials that come to your place, they come for another tax audit again. Those are field tax auditors, which they come to make sure that things are being done in the right way and right manner. And these field auditors too can also help you in making sure that you avoid entering into penalties. So we have what they call special audits. Most of the time, special audit is being done when they see that probably this company has not been compliant, or FIRS sees that this company has not been filing their annual returns. So why would you want your company to be in that kind of special audit, special tax audit? If your company has been compliant and they've been doing their due diligence, they've been declaring their income correctly, they've been doing everything well, I see no reason why FIRS will have to come specially to come to your company to start saying that they came for a special audit. So we have what we call post-filing audits. It's an audit conducted after taxpayers have filed your tax returns. So most of the time, FIRS or any LIRS or whichever government or even the states, the local government, they give you the opportunity to do what we call self-assessment. So that is why you are given the opportunity to declare your own profit. They will do their due diligence. So that's why I see them, they request for your bank statement, request for some relevant information that will help them to make their audit easier. And trust me, FIRS now and LIRS, all of them, they are trying, or State Inland Revenue Service, let me use it that way. They are working together now so that they can even have access to your bank statement. If you give another, if you think you are smart and you give a wrong bank statement, they have the authority now to actually request from your bank statement from the bank. So you should always take cognizance of all these things just to keep the good reputation your company have. So can we go down, please? We have selection of audit, notification, documentation, and records. So basically, tax audits, you see them coming, they start asking for your Form H1, they start asking for your CAC document, ask for your AFS, and so on and so forth. They even, they request for even your, so many things. But the truth of the matter is that they are doing this to make sure that whatever you declare to them is actually showing the true and fair position. That is why you see that most of the time when you are filing your account, they make sure that the auditing, that the auditor has, there's what we call report of the auditor. They will make sure that is the seal of the auditor there, is the stamp there, because they need to know that this your AFS, which we call the audited financial statement, is showing the true and fair position. So that is why you see that sometimes you might file your tax returns and they say that they can't collect it. The reason is because it is not being done by an independent person. So even if you're a tax person, always know that auditors and tax consultants, they work hand in hand. So can we please go down? Okay, we have audit process, finding an adjustment. I wouldn't want to bore them with that. Can we just go down to see? Okay, I will just go straight to penalties. Penalties, like I said before, you need to make sure that you are filing at least 6 months after your year end, your accounting year end. So once you're able to do that, you avoid penalties. And there are situations whereby the tax investigation, they might come and give you a tax liability. You know, and sometimes I notice that tax authorities, in fact, they overstate your tax liability. I've never seen a situation whereby your tax liability is lesser. It is always overstated. But you being somebody that is experienced and you have your tax knowledge and you know that this amount they are declaring for me, it is much. You are given the opportunity to write a letter back to them justifying why you feel that what they are telling you as your tax liability is wrong. So that is why you see some people that they have tax consultants. A lot of people, you might, if you're a good tax person or a tax accountant, you can also write a letter on behalf of your company, telling them that this is what you have, this is what you have, and justifying a reason why you are maintaining this, your tax position. So with that, you and the tax officials can meet a compromise. Although some of them are very, very stubborn, but you need to be very meticulous about what you do. And if you see that it's going worse, you can decide that let's take the case to court. Trust me, there is a tax court, you know, where you go to court and you fight, and if you have reasonable reasons, they are going to accept on your grounds. So a lot of people get scared of tax. I don't want to go to court. Let's end this thing here, blah, 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 blah. Trust me, if you know what you are doing is right, and you know your company is tax compliant, and you are given the true and fair position, there's nothing to worry about. Can we scroll down? Let me see if there's any other thing I need to add. So I guess that's all. So it's important for individuals and businesses to maintain accurate financial records, keep tax documents well organized, and seek professional advice when necessary to ensure compliance with tax laws and regulations, and to be prepared for potential tax audits in Nigeria. So in summary of all what I'm trying to say, you should know that no man or there is no perfect tax person. Somebody like me, I'm still learning in the system and I'm growing and I'm getting better. So if you have this ideology that you know everything, trust me, you will go nowhere. For someone like me, even when I see things that baffle me, I try to call other professionals like me that please, I've not experienced this before. Have you experienced this? You will now notice that by the time you share your knowledge and people also share knowledge with you, you broaden, you have a wider knowledge, you know, you are able to always be ready for anything that comes your way. So no matter how you hear that there's tax audits, you are not scared. Why? Because you know the nooks and crannies of what these tax officials want to ask you for. And whatever they are coming for with you, you have your documents and you have whatever relevant information they will need. Thank you very much. I hope I've been able to add value. So, and we'll be open for contributions and questions now. Thank you very much.
All right. Thank you so much. Thank you so much, Mr. Benga, for that wonderful training. In fact, it was really, really insightful for me. Thank you so much. I was just refreshing on, you know, I remember when my company had issues about tax. It's not that we had issues, but the tax authority just sent us a letter that they are coming for tax audit. You know, at first, when they hear tax audit, they're always afraid. But you as a tax accountant, you as a professional handling their books, when you know that you have your books intact, you have all supporting document that shows that you are filing as at when due, you are not owing any payment. You don't need to be afraid. I sent them a letter that no problem, they should come for their tax audit. Because one thing about this tax authority is that when they notice that you are requesting for extra time, you are pushing them backward, they will know that you have issues in that company, you have issues with your record. But when you ask them to come for the tax audit, they know that yes, this accountant or this person in charge of their books have all necessary record. And when they come, they will not see any loopholes to charge you for additional tax liability. So it's a very important thing that we know what is expected of us as professionals who handles the books of every company where we find ourselves. So we are going to give room for questions. There are a lot of questions in the group chat. I'm going to be reading them one after the other. And also, I will also call on some set of people who ask questions to unmute themselves and ask relevant questions. So the first question I have here says that, can you give examples of allowable and disallowable expenses under the company income tax?
Okay, allowable and
yes, allowable and disallowable expenses under company income tax.
Okay, thank you very much for that. Let me go with the disallowable expenses. I know we have okay, allowable expenses. We have expenses like sorry, are you there?
Yes, we can hear you.
So for the allowable expenses, I believe there's somebody distracting me. Sorry. Okay, has the person been muted?
Go ahead.
Okay, the disallowable expenses, let me go from there. You see some people that, some companies that they will tell me that they are giving, I don't want to call that corporate social, what do they call that? Corporate social responsibility, yes, CSR. So most of the time, some companies fall into that aspect whereby they'll be like, yes, in situations like that, you need to justify. You need to justify if they are allowable. But if we look at allowable expenses, I'm trying to remember some of them because it's been long. But once I see them, I'm sure that I have a knowledge of things like that.
Okay, so let me add to what you have said, right? Okay. Allowable expenses, these are expenses that are used for the business purpose. And most of the time, allowable expenses fulfills the principle called WREN, W-R-E-N. W stands for only incurred. R stands for relevance. Your E stands for reasonable, reasonable. Your E stands for exclusive, and then your N stands for necessary. So any expenses that you incur that fulfills these four principles, we call them, they are all classified as allowable expenses. So most of the time, allowable expenses are expenses that you incur for the purpose of the business. You do that expenses, you incur that expenses because it is necessary for you to incur it. It is reasonable for the business. It is only incurred, the gain arising from that expenses is only incurred for the business. And also, it is exclusive to that business. It's not for any other thing. While for disallowable expenses are expenses that are not incurred for the purpose of the business. For instance, expenses that are incurred for personal use. You know, you see some accountants, they are going to classify expenses that was used for personal consumption, maybe consumption from the MD. Maybe the MD spends some certain amount of money for his own personal use. Some accountants will classify them as expenses or maybe indirect expenses in the business. When the tax authority comes for tax audit, they are also going to prepare their own reports. From the reports that you give to them, they are also going to prepare their own tax report. So if they discover that some of the expenses that you've classified as your maybe administrative expenses or indirect expenses, and they are meant for personal consumption, they are going to add it back to the business. So most of the time, disallowable expenses are added back when the tax authority are preparing their report, while allowable expenses can be granted to you to reduce your tax liability. So examples of disallowable, we have expenses for personal consumption, depreciation, expenses that are not for the business. They are not related at all. You know, you see some accountant, they are going to classify expenses like maybe fine for wrong driving. They will classify it as indirect expenses. The tax authority will not see that as an allowable expenses. They are going to add it back to the business. So we have many examples of them, but the key point is that allowable expenses are incurred for the purpose of the business, while disallowable expenses are not incurred for the purpose of the business. I hope that answers that particular question.
I would love to add to what you said. So just because I was just trying to see how I can break it down, it was becoming a little bit, but if we look at that allowable expenses again, now sometimes you see that some expenses FIRS add back for you and tell you that this is not allowed. So there are expenses that FIRS or the tax authority has allowed that, okay, fine, you can include this for you to arrive at your taxable profit. But there are some that they will believe that you shouldn't, that you need, they will add it back for you, which they expect you to even add back yourself. And for me to even add to what he said for the allowable, you have your traveling expenses, your staff expenses, we have legal and finance costs, like professional services. These are allowable expenses. And then training courses, they are also allowable. Then for disallowable, we have what we have as donation. I can remember when we were still doing ICANN, they will tell you that donations, they are disallowable. If we could remember by time, if you look at business entertainment, all these refreshments that you do, they are disallowable expenses. I can remember I asked a question when I was doing my master's program, that 13th month salary. You know, a lot of companies give 13th month. So I wondered that, is it allowable or disallowable? But thank God we are lucky and I'm fortunate enough to tell you that the 13th month salary is an allowable expense. So don't allow anybody to tell you that 13th month is disallowable, although that is, I'm telling you practically. Then like Mr. Money said, like asset depreciation, then fines and penalties. You don't expect that you are being fined for something or you paid penalty on something, and you believe that FIRS will agree that it's allowable. It is not allowable. And loan repayment, it is not an allowable expense. Thank you very much.
All right, thank you very much, sir. I'll go to the next question that I have here. After this, I'll give room for others to also ask their question. So somebody is asking, I think this question has been answered. He said, is CGT 10% or 20% for companies? Is CGT 10% or 20% for companies?
Okay, we've actually said it is actually 10%, irrespective of if you're an individual or a corporate body. It's 10%.
So CGT is 10% generally for both individuals and for both companies. So for the companies, you remit it to FIRS, while for the individual, you remit it to the state internal revenue service. So please, if you have questions, you can raise up your hand so I can see you, and then I will call you to ask your question. So I can see some hands here. Let me see.
Can I ask a question too?
Okay, you can go ahead.
So how do we know the accounting date? Is it the customer that will tell us, or you will decide for the customer when they give you their book?
Which of the accounting date now are you referring to?
For instance, now, if you want to prepare account for a client, do you understand the accounting year to use, maybe December or June or whatever? Is it you that will determine, or the client will tell you this is my accounting period?
So the client can tell you, because is the person you are preparing the report for. You can say that, okay, I want my financial period to be from June to May. I want it to be this and this. But from your professional advice also, you can also advise them on the best treatment that is possible. But you can take advice from them. If they say they want it this period, you can, if that is okay, you can go ahead. But if you see that, oh, because most of the time when a company is just commencing, you know, the time you usually have abnormal period is when a company is just commencing business. You know, so you can prepare, if you are just preparing your report for the first time, you can have abnormal period such that you have maybe 16th month, 18th month period, depending on whatever period it falls when that company is actually commencing and where you want to prepare their report. So, but if it's not a business that is just commencing, you can decide to use the government accounting year, that is 1st of January to 31st. And then you can also decide to use any other period that you know that is comfortable. But there are some sectors that has certain rules and regulations, certain period that they must choose. Like for instance, now the oil and gas industry. The oil and gas industry, they have been mandated to use government accounting period. That is from 1st of January to 31st December. So if you have a client that you are working for that is an oil and gas industry and the client is telling you that he wants May to April, based on your expertise and based on the law that is guiding that oil and gas industry, you need to tell that client that no, such period is not applicable because of the industry that you find yourself. So there are other considerations that you also need to look into before agreeing on the particular period. But the client can tell you, this is what I want. And if there is no law backing such, you can go ahead. But if there is any law, you need to let them know why they need to go with this certain period.
Thank you, sir.
I saw a question. I think, do we have withholding of 2.5% applicable in Nigeria? Yes, that's Mr. Shitsu. Yes, 2.5%. So if you look at for a construction company, if a construction company issues you an invoice, actually for you to charge withholding for them, you have to use 2.5%. However, you see some people that still use 5% because the construction company don't even know the updated tax laws. Do you understand? So for construction companies, for corporate bodies, to be more precise, is 2.5%, while for individuals is 5%. I hope I've been able to answer your question. Thank you very much.
Thank you so much, Mr. Benga. So I will call on, I can see some hands here. Let me call on Mr. Elijah. You can go ahead with your question, sir.
Hello.
Okay, can you hear me? Good evening.
Yes, you can hear you.
Sir.
Huh?
Okay, thank you. First of all, I must thank you guys for putting up this together.
Hello.
Honestly, it's very, very inspiring and educative as well. Yeah, my question goes like this. You know, most of the organizations, MDs, they will always want a suggestion that will make their tax liability to go down, to be reduced. And based on the allowable and disallowable taxes expenses we are talking about, we talked about a few minutes ago. I want to ask, is there anything like allowance for MDs? And if there is, can it be part of allowable or disallowable? Because, you know, you said that if all these frivolous expenses that is not directly to the business, expended directly to the business will be disallowed. So if someone creates something like allowance for MD, in order to avoid all those frivolous expenses, you create something like a allowance for them, maybe monthly, as the case may be. Is it allowable in terms of tax computation? Thank you.
All right, thank you very much, sir. I would like to throw this question to Mr. Benga. Or is there anyone in the meeting that wants to give contribution to that question before I say what I have to say? Okay, so based on the question that you asked, most of the time it is advisable for directors' allowance for directors' allowance, you charge withholding tax on them. You charge withholding tax on them, and they are allowable expenses. They are allowable expenses. The tax authority will allow you deduct it to reduce your tax liability. But most of the time, the confusion that professionals used to have when it comes to MD's expenses and the likes is that on MD's expenses, you don't pay payee on it. You don't pay personal income tax on it. What you pay on it is withholding tax. That is why when you check what Mr. Benga gave to us earlier, for directors' fees, anything that has to do with directors' fees could be allowance, salaries, anything that the directors enjoy. So most of the time, what you charge on them is withholding tax, but you don't pay payee on them. And that is why the accountant who is in charge is supposed to prepare their reports differently. So when the accountant is remitting payee for the employees, you don't include directors' payment or director's remuneration in it. So you prepare a different schedule wherein you calculate withholding tax on director's fees and then you remit it to the necessary authority. So director's allowance is an allowable expenses. Use it to then reduce your tax liability, and the tax authority will allow you to use it to reduce your liability. I hope that answers your question.
Oh, that's very good. That's perfectly.
Yeah.
Very,
So
very
just
well
to add to what he said, sir. So you see,
we can't hear you, Mr. Benga.
Yeah. So accountant makes some mistake whereby they include some expenses, like MD's expenses should be under some allowances, like the benefits that is attributed to him. When doing the payee, you should consolidate those amounts. By the time you start differentiating it, the wardrobe allowance, and I'm seeing it in your P&L account, obviously I'm going to disallow that expense. There are ways you can put those allowances that it will look allowable. I wouldn't want to start teaching people some things because I don't know if there are some tax officials here, but there are ways you can adjust it and it will look as part of the benefits of your MD. So there are some benefits that your MD, because you see some complaints, I don't know if you remember that some MDs do self-assessment whereby they remove themselves from the payroll and they pay direct assessment. I don't know if you are familiar with direct assessment. Mr. Money, I don't know if...
Yeah.
Direct assessment, there are some MDs that they prefer to do direct assessment rather than being on the payroll.
Yeah, true.
Do you understand? So that direct assessment is more like you doing your own self-assessment, and the tax people come, they argue, blah, blah, blah. But the truth of the matter is that it depends on how you've packaged that man's benefits.
Yeah.
So whatever you have to do, but trust me, don't allow it to be under the administrative cost. Because even if it's in the administrative store, it should be, I don't want to start teaching how to window dress or manipulate. But the truth of the matter is that it must be justifiable, whatever you are doing, so that even if they disallow it, you can argue why it needs to be allowed. Thank you very much.
All right, thank you so much, Mr. Benga, for that. So I'll call on Mr. Okwaoluwa. I can see your hands up. Can you ask your question?
Okay, I miss you. I'm not a mister.
Sorry. Sorry for that.
No, it's fine. Okay, so my question is that, like, because you said there's difference between taxable profit and assessable profit. So I just want to know the difference between those two words.
Okay,
Do you
Mr.
get my
Benga.
question?
Yes, I got your question. Is there anybody in the meeting that want to answer that question? She said, what's the difference between taxable profit and assessable profit? If you want to answer the question, you can unmute yourself and ask and speak, please.
Hello, can you hear me?
Yeah, you can hear you.
Yes,
Go
we
ahead.
can.
Okay. Based on my understanding, accessible profit is a profit that is arrived at after you've adjusted for your allowable and disallowable expense, right? So we know the format for computing your tax liability. So when you deduct and add back those major adjustments, then you arrive at your accessible profit. That's the first step. And then let me just add that your EDT is charged on your accessible profit. Then when you go further to adjust for your capital allowance, if you have loss from the prior year, all of those adjustments after accessible profit, then you can now arrive at your final taxable profit. That is where the 30% will be charged on, sorry, depending on the size of your company. So taxable profits is the final after all adjustments have been made. That's where the tax rate will be charged on. Why accessible is after you have adjusted for your allowable and disallowable expense.
Thank you very much, Ellen, for that. You really nailed it on the head. So I hope that answers your question.
In fact, I was really impressed.
Yeah.
Okay,
So
thank
let me
you.
go to the next question that I have here. Okay, I can see the ends of Mr. Toyosi. Mr. Toyosi, you can go ahead with your question before I read the question I have in the group chat.
Okay, good evening. Good evening. Thank you, Mr. Gbenga. Thank you for the effort. I appreciate you, sir. My question is two. First question is, when it comes to withholding tax on rent, you will see a situation whereby the landlord will say he wants his money paid net of all taxes. And by the time I now walk back, I discovered that it seems the company is the one bearing the withholding tax. And at the end of the day, we are still going to remit it on behalf of the landlord. I don't know if you get my point. So how do I
I'm
now...
trying to understand you. Can you come again? Because let me just get a better picture. So you mean your landlord, after charging you, after you, wait, when is it not your landlord that issues you the receipt and whatever, then you pay the net payable amount?
Yes, the landlord issues us receipt of 20 million that he wants his money net of all taxes, which is that 20 million. You get, which is that 20 million. So for me now, because at the end of the day, in that instance, it seems the company is the one that will not bear the withholding tax at the end of the day, because he wants the money to be 20 million, exactly 20 million, nothing more, nothing less. He wants 20 million. And however, tax authority are there waiting for you to pay withholding tax on the rent. Do you get my point? So now, how do I now make sure that, because by the time I gross it up, the way I always do it is to do 100 divided by 90 times 20 million. So I will get 21 point something 99999. And at the end of the day, I will deduct 21 million minus 20 million. So the withholding tax will now be that 1.1 million or 999 or something. So my question is, for us not to be bearing that huge amount of withholding tax, how can I work back in situation that it will reduce the withholding tax? Because at the end of the day, it's the company that still bears the withholding tax, and we are still going to remit on behalf of the landlord. Do you get, using the landlord's thing to remit for him, not to the company? So do you get my point? That's my first question. The second question is, hello?
Yes, I'm with you.
Okay. The second question is on this, what's it called? I've forgotten. Oh, please, answer the first question. I've forgotten. Maybe I will answer the second question.
So for your landlord, he's a smart person. Let me put it that way.
Yeah, it's very, very smart. He's a smart landlord.
Yeah, so I wonder the fact why we're allowing you to bear that cost when he knows he's the one to bear it. So, but what our advice is, you need to still speak with him. That's the truth of the matter. Because if I was to tell you to adjust it, I wouldn't want a situation whereby you have to now start settling the tax authorities again. And another thing is just that when you meet a compromise, you can always speak with the man to explain the implications of. Have you maybe for once explained the reasons for withholding? Hello, is it there?
Actually, no. No, but they always, we have two of them, so they always request for net of all taxes. Or most of, in fact, two of them always say they want net of all. No matter the explanation you give them, they will just say no. It's either you accept it or not.
Because by the time we are now doing 20% of, 10% of 20 million, you are paying 2 million naira on their behalf.
Exactly.
Uh,
But they don't
see,
want anything less than 20 million or more than 20 million. What they want is the accurate amount of money.
Yeah, the landlord is very, very smart. But I feel you should actually allow him understand that at the end, you're actually paying 22 million naira, which is a cost burden to your company. And for you to be an accountant, you need to explain to him that your company can't be bearing that cost burden. See, because the truth of the matter, no matter how you try to gross that amount up or do this thing, at the end of it all does not still make you avoid the amount you are still going to pay to the tax authority. Except, I don't know, but this is wrong. I can't be teaching you or telling you I don't know, I don't want to be telling you to window dress because there are things that are coming to my head, but it is not something that is right. So I would like to stick with my integrity that you should speak with your landlord and explain the cost burden.
Yes, we don't want to window dress, but my question is, how can I walk back in such a way that we will not be bearing that huge amount of money for any subsequent rent we want to be paying?
Yeah, okay, let me add to, okay, let me first of all throw it out. Is there anyone in the meeting room that wants to provide solutions to this question that was asked? Is there anyone that would like to say something on it?
Hello, good evening.
All right, good evening.
Yes, my name is Sadio Ajuba. So as regards to what he said, I think the best way to go about it is for him to capture 22 million naira as his annual rent instead of 20 million naira. That will go a long way in reducing his tax liability.
Sorry, please come again. I didn't get you.
Since he said what he pays the landlord is 20 million naira. So in such case now, for him not to bear the burden wholly, so he should capture 22 million naira as annual rent expenses instead of 20 million naira.
That means he's already bearing the burden now.
Yes, even more. That's, I think, 2,200,000.
Because if you put 22 million naira, you will not still pay withholding tax on that 22 million naira. You are even bearing more burden.
Yes, now that's 2.2 million. Okay, I feel what can happen. Let me just say something. Now, if there is a way you and your landlord can discuss whereby even if the right amount is 20 million naira, you can, I don't want to do this, but you can ask him if he can give you another receipt whereby he's giving you that price for, probably you have to understate that rent for you to take that burden, because I'm 100% sure your landlord is not interested in taking any tax burden. So definitely you know the right amount, but it's just that there is no way, even government, FRS will see it in your bank statement, except you pay him the first amount, then you pay the other one later. I don't know if you understand what I'm saying.
Yeah, I got you.
But you using 22 million naira, I really appreciate what that man said, but there is no way you'll be paying in fact, you are paying more than what you're envisaging to spend, right? But if you can have an original receipt rather, justifying that instead of 20 million naira, you paid 15 million naira, I believe your withholding tax that you are remitting on behalf of your landlord can reduce. So you should be working on reducing it by trying to manipulate with the rent.
Hello, good evening.
Hello, sir.
Okay, hello, sir. Sorry. I want to ask, in a situation whereby a dividend is paid to shareholders and then they will charge you withholding tax. that withholding tax credit note, is it that they are going to remit it on behalf of those shareholders using their
I understand what you're saying. That's for the directors or shareholders rather. Hello?
that thing or PEID for some of us that is
Your line is breaking. Opayemi, your line is breaking.
hello, sir,
Opayemi,
can you hear me?
is it Toyosi that is asking question?
Yes, please. Yes, that's the second question, sir.
Oh, okay. Please come again with your question.
I mean, after a company has actually charged withholding tax on behalf of its shareholders when paying dividends, the withholding charge on the dividend paid to the shareholders, is it that the company is going to remit it to the shareholders using their payee ID for those shareholders that are a resident of Lagos? You know, if I an employee working in Lagos, you have a payee ID. So is it that the withholding charge you or to the credit note on withholdings, are they going to remit it on behalf of the beneficiary, which are the shareholders, so that at the end of the day, the shareholders can still use the credit note to reduce their payee by the time they are doing their filing, annual filing? I don't know if you get my question. Or the company is going to remit it using the company's um, um, using the company's SIN or using the company's details to remit it all on behalf of the shareholders. That's my questions.
Do we have anyone that wants to answer that question before I say anything, please?
Hello, good evening. Hello.
Yes, good evening.
Okay, good evening. So, by my understanding, if anyone, either a company or an individual withholding on money that is paid to any beneficiary, then when they are remitting that withholding, it should be paid in the beneficiary's own name with their own code, not the company's own code. It should be paid in the name of the person from which the money was withheld. By my understanding, I think that's how it should be done.
Well, yeah, but this is dividend that was withheld. The withholding
Yes,
on dividend paid to the shareholders. That's the question.
yes, yeah, I think it should still be the same because it's like I'm supposed to receive money, I'm supposed to receive dividend from a company I'm investing in, and they withheld some of my dividend, which is my dividend. So they should remit that money to the government on my behalf, so I can use it to net off my own personal liability. The company should not also use my money to still net off their own liability. It is my money. They just withheld it for me, so it should be remitted in my name still. So if I'm receiving dividend and the company is withholding, then it should remit it in my name.
Okay, thank you very much, Mr.
Hello.
Okay, go
Okay,
ahead, Aisha.
anyone want to
Good
contribute
evening.
here?
I want to contribute on that.
Okay,
The answer is very correct, but most of the company does not use the name of the beneficiaries to remit.
exactly.
Ideally, that is how it's supposed to be. But in trying to avoid payments or to underpaid pay the relevant tax authority, the company always pay in lump sum and give schedule, withholding tax schedule or dividend schedule on every other taxpayers. I hope you understand what I'm saying. So as to confuse the tax authority, what belongs to what. But ideally, the company is supposed to remit on each beneficiary so that the beneficiary can get to claim it when it is needed.
Thank you
So
very much.
if the company is not doing that, can we sue the company?
Yeah, I think
We are not lawyers here.
right.
Yes, you can.
I think it's within our right, actually.
Yes, you can.
Yeah, so like they have rightly said, that is how it should be done actually. So, but sometimes the other side of it is sometimes the company that is investing in another company, sometimes they invest on the name of the company. And so sometimes when your company invests in the name of the company, because you don't forget the business is a legal entity. The business stands alone, the shareholders also stands alone. So what the other company might be looking at in some cases is when a particular company invests in the name of the company and not in the name of the shareholders. So if you invest in the name of the company, so most of the time, those companies, when they withheld dividend, when they withheld withholding tax from your dividend, they are going to remit that dividend on behalf of that company that's actually invested in their name. So sometimes from their end also, they also look at how does this company invested in the first place? Is it that the company invested that amount using their name? Because don't forget, the business is a legal entity separate from its owner, separate from the shareholders. So if the company do not invest in the name of the shareholders, that company that is withholding that tax will not likely remit on behalf of the shareholders. You get? So these are the things that some companies actually look at, in remitting that withholding tax that was deducted on dividend. But on a normal basis, it should be that you remit those withholding tax on behalf of the company, but you also now need to look at it from the angle of who invested that money in the first place in the other company. You get? So these are the dicey situations to rate.
Okay, very well. Thank you very much. So clear.
Okay, thank you so much. Okay, so Mr. Abdurrahman, go ahead with your question, sir.
Thank you very much. Good evening. Thank you for organizing this tutorial. I think it's very helpful. My question has to do with the company income tax in relation to the tax this thing that was enacted and effective in September this year. That is company income tax affected in any way, directly or indirectly, with the Finance Act? If yes, to what extent, and how are you going to be looking at it going forward? Thank you.
Thank you very much, sir, to that question. Mr. Benga.
I didn't really get his question. It wasn't clear. Can you just summarize it? I know he was talking about.
Hello? Can you hear me now?
Yes, please. Thank you very much.
I said, what is the Finance Act? I want to ask a question relating to company income tax.
Okay, sir.
In relation to the Finance Act 2023, that is Finance Act in any way directly or indirectly affecting the company income tax preparation? If yes, to what extent? That is
it's
number
not
one.
Actually, okay, let me answer.
Number two.
Yes, sir.
Is it affecting the payee? If yes,
the payee.
To what extent?
Okay, sir. Is that all, sir? Hello, sir. Is that all?
And how are you going to be calculating it? Yes, sir.
Okay. Firstly, them being an increase in education tax doesn't affect company income tax, and neither does it affect payee. Them being a quick adjustment in education tax, I think, is because of the reason for this. I don't know if we've noticed that they've now inflation in our prices, and schools now they've increased their prices of school fees and everything. Definitely, and I don't know if you remember when in this new regime, when I think they were saying that there will be sponsorship for, not sponsorship, rather loan. There must be somewhere they will make that money from, right?
Hello, sir.
So, hello, can you hear me, sir?
Yes, my question is, what is Finance Act in the company income tax and payee? If yes, to what extent and how do we now calculate it moving forward?
It doesn't affect it, sir. It doesn't affect it, sir.
Okay.
Yes, sir,
Thank
it
you.
doesn't. It doesn't. Yes, sir. Thank you very much, sir.
Okay. Is there anyone that wants to add to what Mr. Benga have said as regarding that? Please, if you have anything, you can unmute and speak. So the question is, what's the effect of the new Finance Act on company income tax? Does it affect or does it not affect?
And also the payee also.
And, okay, and also payee. Anyone? Okay, so let me add to what Mr. Benga have said, Bemiga. It does affect your tax liability actually, because for instance, now some of the adjustments made in the new Finance Act, education tax has been increased to 3%. So, and don't forget that your total tax liability is your tax liability to be paid by the company plus the education tax. So if education tax has been increased to 3%, definitely that is going to increase your total tax liability that you will pay to the government at the end of the day. So the adjustment of education tax affects your company income tax because you'll be paying more tax now. You'll be paying more tax liability irrespective of any amount you are paying. Either you are paying the 20%, 30%, or you are paying minimum tax. You are still going to include education tax to it. Education tax is constant. Is something that you must pay. So that 3% increases your liability. Another thing that also will affect the company income tax in adjustment to the Finance Act is the removal of investment allowance. You know, companies usually, the tax authority before now, usually gives investment allowance to companies that have incurred some special assets, companies that maybe some plant and machinery that are used for special transactions. You enjoy investment allowance, and investment allowance is usually added to your capital allowance that you have to reduce your tax liability. So now the new Finance Act has said that there is a scrap on investment allowance. So that means that what you are enjoying before to reduce your tax liability, you are no longer enjoying it again. What's the implication of that? The implication of that is that your tax liability would also increase. Instead of you to use investment allowance to reduce it, it is now you are no longer enjoying that investment allowance. So that means your tax liability would also be affected, and it will be affected in the form of increase in your CIT payment. That's the second adjustment that was also made. I think the third adjustment that was made was on building. That this is peculiar to the industry or the company that operates in that industry. You know, the tax authority before now, for instance, all these transformer companies that operate in transformer, radio and television, they don't usually pay tax before. But now the new Finance Act says that all those companies now, irrespective of what you are doing now, irrespective of all those activities that was classified under building that has now been removed, you will pay tax on all of them. So what that means is that companies that are operating in that space, before their tax liability is usually low because they don't pay tax on certain things, certain items. But now the Finance Act says that they will need to pay tax on those items. So definitely when those companies are preparing their CIT is going to affect, is going to increase their CIT that they are going to pay. So education tax, the removal of investment allowance, the removal of taxes from all those items that were classified as building, you know, adding taxes to them would increase the CIT of every company that, you know, that is affected. So it's going to increase your CIT, but payee, the new Finance Act does not affect payee. All the adjustment that was made to it does not affect payee. Your payee is still prepared using the normal PIT rates from first 300 and the like. So you still do that. There is no adjustment that was made to that, but most adjustment was on the CIT. And then the other one is based on VAT. VAT is now on the 14th and not 21 day. Just like what I think Mr. Benga mentioned it when he was explaining the value-added tax. So value-added tax now, with the effect of the new Finance Act, is no longer 21st of the following month. It is now 14th of the following month. That is 2 weeks into the new month. You are expected to file your value-added tax so that you will not incur penalties and interest. So I think that is the major adjustment of the Finance Act on the recent operation. I don't know if that answers your question, sir.
Hello, sir. I think there is a misconception as regards to that deadline of
Yes,
tax.
it does. Thank you very much.
It's actually for withholding, value-added withhold by the
agent
appointed agent. Yes. Why the normal non-appointed agent still remains 21st of the following month. For the appointed agents like Deposit Money Bank, telecommunications, and government agents, those are the ones that withhold VAT from source are to remit on before on the 14th of the following month. Why the other normal VAT payable still remains on the 21st of the following month. I stand to be corrected based on this, sir.
Okay, no problem. That's fine. That's fine. All right. Thank you very much, Mr. Abdurrahman. I will also read some few questions here before we call it a day. The ones that have been answered, I would not dwell much on it. The ones that I know that we have not touched, then I would ask it. Okay, so there's a question here from Fikayo. He or she said that, does the principle that if dividend is more than profit, you cannot be charged withholding tax apply to all other categories of withholding tax? Mr. Benga, I think that question should be directed to you. He said, does the principle of if your dividend is more than your profit, which says that you cannot be charged withholding tax, does it apply to all other categories of withholding tax?
All other categories are yes, because it's the if you read closer on withholding, you'll see that. I think I even read it. Was in, I think it was a tax book, ICANN Park, or I can't remember. But what he's saying is that if the dividends you paid out is more than the tax should be charged on profits. That is what I wanted to understand. And trust me, if you are paying dividends more than what you've even made as profit, where do they want to tax on? I don't know if you understand. So the withholding will not be charged. It is exempted. It is exempted. Yes.
All right, thank you very much. Yeah, I also have a question here that says that, is there any other name you can give aside 13th month salary that will ensure that no tax liability is incurred on it? Is there any other name you can give?
The truth is that 13th month is an allowable expenses, right? So I wouldn't know a reason why you would want to give it another name. 13th month is 13th month. So it's allowable. It's not as if they will disallow it by adding it back for you, trust me. So I feel it's even okay. These are things and benefits that staff should collect, or So I don't see any issue why you should want to give it another name. It is allowable. So that's not a problem.
So and because it's allowable, tax will be charged on it.
Yes, tax will be charged on it. No, if okay, yes, I think I'm trying to understand what the person is saying. So instead of you putting, you don't want tax to be charged on that
Yes, you don't
amount.
want tax to be charged on it, so you want to change the name so that they will not charge tax it.
So that they won't charge tax on it.
Yeah.
And what's the person? What the person can do is actually include the expenses under other administrative expenses. But you must find something to justify those amounts because it will show in your bank statement that you expended this particular amount. But I don't see a reason, like I said, for you to avoid 13th month.
Thank you very much, Mr. Binga. So one more question from Fikayo. She said that you mentioned tax disputes. He said, please, does tax tribunal function now in Nigeria?
Yes, it does. Yes, it does. In fact, yes, I could remember, I think when I was still in an auditing firm, we had a tax fight. We took the case up. We even had to go to Abuja. From Abuja, we argued, and to cut the long story short, we took the case to court and we won the case. That is why I tell people that if you have strong evidences, you can win. Some tax people will not even want you to go that far. Trust me. Once you start saying, let's take they will want you to solve it amicably. So that's all I have to say. It works. And don't always have it at the back of your mind that since it's government, it will favor government. If truly the system is working and you have evidences to back it up, you are going to win the case. Thank you very much.
All right, thank you so much for that question. So I think all other question has been answered. So somebody is asking what's the meaning of REN principle. So REN is only incurred, R is for reasonable, E is for exclusive, and N is necessary. So any expenses that is classified under the REN principle is an allowable expenses. Okay, so I think we don't really have exhausted all the questions that we have here. Okay, so thank you very much. Does anybody have one or two questions to ask before we call it a day? From the audience, do we have anyone that has one or two questions to ask before we call it a day?
Yes, I have a question. I've been raising up my hand since, please.
Oh, sorry about that. I didn't see your hand. Sorry about that. Please go ahead.
Akimbola Kayode. And my question is,
sorry.
I have a challenge while preparing my 2022 FS, being the first time I'm treating withholding tax. And my company has accumulated withholding tax that has not been utilized for so long. Now, how do you input that in your FS when it's to be audited?
Okay, so let me get you. When you mean utilize, is it withholding tax credit or the one with withholding tax?
Yes, withholding tax credit.
Okay, withholding tax credit. So your withholding tax credit should be under your current assets. It should be placed under your current assets because it is something that you are supposed to use to reduce your tax liability at the end of the year.
Yes.
So you should be under your current assets. Withholding tax credit is always under your current assets. So your withholding tax payable, if it is the one that you want to pay out to the tax authority, that one is a liability. It will be under your liability. But your withholding tax credit, the one that you enjoy from people that pays on your behalf, it should be classified under your current assets in your FX. And so what you need to do now to now enjoy that benefit at the end of the year is to ensure that those companies have filed those withholding tax on your behalf and it is reflecting in your tax promise account. That is how the FRS can allow you enjoy that tax credit, that withholding tax credit that is in your current asset. Because if you just show the FRS that you have withholding tax credit of 2 million naira in your current asset, in your FX, they want to see the evidence. And where is the evidence? The evidence is in your tax promise. So you need to follow up with those companies that have withheld those tax on your behalf, ensure that they file it on your behalf and is reflecting in your tax promise account. So once the tax authority sees that is actually on your tax promise account and is in your FS account showing as 2 million naira, they can allow you to reduce your tax liability with it.
Okay, thank you. One more thing, please. There was a question that was raised the other time. My boss was previously on personal assessment. So he removed himself and put himself back on payroll, at the same time still enjoying benefits. And I have tax people that keep coming to me that, oh, you need to be filing personal assessment for your directors because he's enjoying remuneration. How do you account for that?
Mr. Bemiga, are you there?
Yes, I am.
Okay, over to you, sir.
Okay, sorry, what did he say?
Okay, Mr. Akimbola, can you come back with your question?
Yes. My boss was previously on personal assessment.
Okay.
Then he returned back to payroll, payee,
Yes.
on a monthly basis. But at the same time, at the end of the year, when you are preparing I'm preparing the FS, he's still enjoying remuneration in order to reduce our liability. And tax people are saying he needs to be filing for him his personal assessment every year. How do you go about that?
Okay, because on a normal day, it is not advisable to be in two. Like, as is in your payroll and is also in your on self-assessment, right?
Yes.
So the worst thing can happen is just that since people are already paying payee on his behalf, he should be filing new for direct assessment.
Okay.
Yes, he should file new. So if tax people come, and I know it's from Internal Revenue Service.
Yes, Internal Revenue. Yes.
File new and tell them the reason why, because you have converted him back to payee, and this is the money you remitted on his behalf. I hope that will answer your question, sir.
Perfectly well.
Thank you very much, sir.
Okay, thanks so much.
Yes.
All right, thank you so much, Mr. Akimbola. One last question before we call it a day. One last question. Mr. Abdurrahman, I can see your hands up. Are you raising your hand? Okay, so I think we have no more other questions. So I want to appreciate everyone who have joined this meeting tonight. I believe with what has been said so far, we have added enough value to ourselves. This is Elite Accounting Professional Service, a training institute. We organize trainings like this to equip professionals in the field, trainings relating to accounting, tax, and also audit. And we also offer ICANN lectures for those who are preparing to write ICANN exam. So the video for this training will be made available on our YouTube page. You can always check us out on YouTube. Just search for Elite Accounting Professional Service. You see our profile, and then you see all these videos on our YouTube page. So you can always go back to this video and listen to them again to get more value if we have forgotten any other page. Follow us on our different social media platforms. We are on Instagram, we're on LinkedIn. Just search for Elite Accounting Professional Service. You see us, and then follow us for more updates. So this training continues next week by God's grace. We'll be having another set of tax training, and in this training we'll be looking at tax planning, and we'll be looking at taxation for SME, for small and medium scale enterprise. How do you manage taxes for small and medium enterprise? So we'll be having a very top tax analyst or a tax expert giving us this training next week, same time by 6 p.m. If you know that you are not in our WhatsApp group, we have a community of over 2,000 plus on WhatsApp. you can reach out to me. I think I've shared the link to some platforms. So feel free to join the links for more updates. And we also provide solutions, practical solutions to work issues, issues that you might be encountering at your various places of work. We have professionals, we have CEOs, we have CFA, CFO, a lot of professionals that is ready to provide solutions to whatever issues that we are facing. And you can also network. So feel free to reach out to me if you are not on our WhatsApp platform, so that we can add you up to the community. So thank you very much, everyone, for joining. I want to believe that we have gotten value from this training. So I would like to see everyone next week by 6 p.m. God's grace, to be listening to another tax expert in the industry on tax practical training. So thank you very much. Let us have a lovely night rest. Bye for now.